Good morning, everybody, and welcome to this Chamber webinar on business finance in conjunction with our partners Finpoint and the Chamber Finance Hub, which is powered by Finpoint. So I'm delighted this morning to be joined by two guest panelists. We've got Guy Bridge, the Chief Exec of Finpoint, and also Diana Frangou, who's a restructuring partner at RSM. Morning, both of you.
Morning.
Thank you for joining us. So the format for the session this morning is that we're shortly going to hear from Diana and Guy on some of the challenges that are facing business right now because of the pandemic, particularly probably zoning in on cash flow, and then some of the finance options that exist to help. And obviously Guy can give an example of how Finpoint in particular we're able to help people to manage through that period. As always, it's open to Q&A. That's always the most sort of interesting, fun part of these sessions. So please do pop any questions that you have in the chat or the Q&A function. And what we'll endeavour to do is following the presentations to try to cover off as many questions as possible. We will have a hard finish at 12 o'clock. If there's any questions that we haven't been able to get to, then I know that Guy and Diana are happy to pick those up offline as well. And so we'll make sure that if we don't get to it in the hour, we will do subsequently. So I hope that all works, and do keep the questions coming in. So Diana, I'm going to sort of start with you really, and be great to get your sort of take on all that you're seeing in the market right now, obviously through your day job as that restructuring partner at RSM, and just sort of some thoughts on the common challenges that are facing businesses right now and that you're seeing on a regular basis.
Absolutely, Paul, and I thought it would be useful just to share some thoughts with you. So let me just see if I can. So it's fair to say, Paul, yes, we are in changing times at the moment, and I always think it's best to kind of introduce really kind of how we see businesses and how we see their challenges at the moment by looking at our traditional decline curve. So when you look at a business, you can see a business on the left with strong corporate financial health that may be going through some signs of underperformance and decline. But what you'll actually see is that there are plenty of opportunities for support to a business that has got robust financial health, where it can further improve its performance. But more importantly, and I think this is what's important now, is it being resilient for the uncertainties that lie ahead. And you can see that the closer the business is to strong financial health, the greater the amount of time, options, and flexibility that the business has to implement change and further decline. And as you can see, the worse a business gets, the fewer options that are available to them. Now, if we think about that in the context of the COVID world, so you get my kind of very, very crude drawing of how I see the decline curve right now. Yeah. And what, as you can imagine, any big business that was impacted by the first lockdown restrictions back in March would have seen a decline, as you can see that straight drop. And what will have happened is there would have still been businesses in distress and a state of decline that accelerated the need, certainly from a restructuring advisory perspective, for us to provide support and options for that business. And then you've got where the businesses had to essentially mothball where they were and hold their operations. And it's only really when a business comes out of those restrictions and then starts its road to recovery, can you then determine in terms of where it might sit. And you'll appreciate that a lot of businesses can fail coming out of a recession than they do coming in, because you've got that question then about the uncertainty of how you kind of ramp up your business back up, how you get the funding for that business, and how you survive in that new normal. And an over trading position and the need really there to have the right funding package and the working capital available will determine where it sits on that decline, or indeed its increase, or just sit on that steady state really in terms of a zombie firm. Where we're seeing things, it's undoubtedly in terms of where we thought we were starting. We thought at the beginning of lockdown, there was a real concern that the restrictions that there would have a significant detrimental impact to every business and result in a floodgate of business failures. But you know, the government, as we know, quickly stepped in with some considerable measures to provide that financial support for businesses. And I think by far the furlough scheme has had the most positive impact on enabling businesses to essentially put a pause button on where they were and not go into that immediate decline. And really that's paused some of the critical decisions that they've needed to make for that business. And that, coupled with further assistance in terms of other reliefs such as HMRC and landlord standstills, has really enabled them to keep that steady state. And I think Guy will talk more about the CBILS and bounce back loans later on, but really in terms of seeing that support, not just new borrowing, but more so the existing borrowing that the businesses had, and give them some additional flexibility. But as we come to an end to some of these provisions, and more critically the kind of the easement of the insolvency provisions, that where we've got to stay until the end of December, we're then going to see that need for that working capital requirement and those additional cash liabilities that have accrued. So Paul, I just wanted to just give in very quick overview, kind of the cash flow forecasting, because I think that's important for every business. So we need to look at the 13-week cash flow in terms of that lifestyle of the business, and very pertinently, I think on your LinkedIn post yesterday, I think the first post was cash is king, which we undoubtedly know. But it's actually getting a cycle of the business, understanding what demands are there, and looking at that driven by both the income, and that's hard to do at the moment, given the historical averages that you would look at is completely different year on year, given the demands post-COVID, and then looking at it from a requirements driven in terms of what you need to do for those essential supplies and payments, and make sure that you prioritize them. But I think we need to look further ahead than that. And this is one that's a big topic of discussion around the ability to put long-term budgets and forecasts. And Guy will, agree with this in terms of the need to do this to support some of the loan applications that are here. But, how do you do that? How do you plan for that uncertainty? And I think it's just making sure that you've got a number of different scenarios here. So you've got to, expect a different course of action that may happen than actually what you think might happen at the time. And that will be down to the market, it will be down to the sector, the location, even in terms of the varying lockdown restrictions that we're under. And let's not forget kind of Brexit that's looming ahead. So I think it's really important here that you put those considerations into play, and you make sure that you've got a fully integrated model that you can start to then monitor the performance. And I think these have been invaluable tools that must be work in progress, Paul. It must be things that you can adapt and change as you go through these uncertain trading times. I think just to finish off on that, it is about just ripping up the rule book. Everything we ever know about financial planning and forecasting has gone out the window, and certainly when we review them, it's done that as well. But it's about planning, it's about the ability to monitor performance and look at the business's financial and operation needs, but having that resilience so that you can seek out those important opportunities that are available in these uncertain times, and think about it in terms of both the investment, the diversification, and also how the business can increase market share. So knowing what resources you have and how you can leverage them, in my view, it is really, really critical. And
I love that you've got Darwin in there as well, Dan.
Yeah, got to get him in. Having been to the Galapagos, you've got to get him in.
Oh wow, that's a webinar for another day, isn't it? That'll be, but it's just sort of drawing out a couple of points there, and you're sort of the decline curve.
Yeah.
I suppose it's trying to. be aware of the uncertainty in the period
That's
ahead.
it.
And I mean, it's really difficult to put timeframes on this
Of course.
right now. But let's say the next 6 months or so,
Yes,
yeah, and
agreed.
let's hope the vaccines come through. But we recognise there's going to be a whole host of uncertainty and challenges. And you're right. It seems that what you're saying, to be on towards the top of the curve, this is the time.
This is the important time, yes, and it's to make sure that you stay there. And if you see the underperformance coming ahead because of your scenario planning and because of your forecasting, you do something about it. And a lot of the conversations that we're having with our clients and with their lenders is about doing something now, not waiting for it to have happened and then have a reduced number of opportunities to deal with it. And
that's why, being fully aware of what the options are,
yes,
speaking to, and we'll hear more shortly, Finpoint and finding out how do we take, and you use it or not, but it's about having that flexibility, isn't it, to sort of prepare for the unknowns, because down the line, again, schemes may change, they'll close, we don't know what else is going to come, but you can sort of look at what is here right now, look at your own business and what the external support is, and if you can sort of build in more space, then you're going to be better prepared for whatever comes
as well, Paul. The importance is that you be able to say to yourself, right, okay, at this point the business is not where I thought it would be. We thought we'd have orders at this level and we've not got there. So what are we going to do? How are we going to flex our business plan to adapt to that? What are we going to do now rather than let it deteriorate any further?
And it's one point that a lot of our members flagged after the Chancellor's last update, and while the extension of furlough and the various schemes was very welcome, obviously was the loss of the furlough retention bonus.
Yes.
I think it may be sort of something else may appear down the line, but because a lot of people were saying that they had actually been into their cash flow for February, a degree of certainty in a time of a lot of uncertainty, and so now they had to take that out. So back to your 13.
Essentially rip it out, and that's exactly right. And this is where you've got all those different scenarios. So, one of the things we were doing at the early stages is looking at how they were unwinding the furlough, because there was an assumption it would stay for so long. And I was saying to businesses, but have you done a scenario where actually furlough doesn't stay at the 80% that you think it's going to stay for another 3 or 4 months? What happens if it drops? What will your business do to adapt to that change? That's really important.
And Diana, just before we move on to Guy, I mean, Andrew in the chat's put a question which would be interesting to get your thoughts on. Just sort of saying, how many SMEs adequately manage their finances, never mind sort of the cash flow forecasting with a model? And I suppose to just the sort of conversations that you and colleagues at RSM are having, encouraging people to do this.
It's some have got, some we've been really impressed with how they, certainly at the beginning, how they adapted very quickly to, this is for the position of the business, this is what we think will happen, this is our decline, and this is how much money we need to get back up. Very, very, very clear. As you can imagine, in restructuring, we see a lot of businesses that unfortunately sit on that amber line that you have within that decline curve, where it's just, they're just not able or have the ability or desire to make some of those critical decisions. And all that happened then, because of the crisis and the support that's available, they just sat in that zombie state, really, that steady state with not being able to move. And this is where the good businesses need to take those opportunities now and seize those businesses that are in that steady state. Think about how the good business might grow and take out that market share and opportunities, rather than just to leave it without addressing the other business addressing its critical financial needs.
That's where preparation being, the earlier you do it, the quicker you move, the better, and the longer you leave it, then the harder things will get.
And there's a lot of transactional activity around, Paul. We've been staggered in terms of, certainly from an M&A perspective, how much activity is now happening.
Okay.
And the desire for that. So that's for a business to think, both as a seller and as a purchaser.
Businesses doing exactly what you said, and those who are in the good position.
Yeah, absolutely.
Already, which is again part of how we come out of this, and your business can possible.
That's it.
You need
yeah, be the taller man, so to speak.
Yeah, got it. Thank you, Diana. We'll come back to you as we get into the general questions, but I'm going to move over to Guy Bridge now, who, as I said, is the Chief Executive of Finpoint, who we partner with here at the Chamber with our Finance Hub. But I mean, Guy, tell us a little bit about Finpoint, what you do, how you do it, and I suppose, how business has changed for you over the past 8 months or so.
Well, thank you, Paul, and interesting to hear some of Diana's comments there. Yeah, I mean, Finpoint, a brief update before I sort of run through a couple of slides. We are FCA-regulated financial intermediary, and what we're trying to do is compete with the traditional broker network, but to help businesses. We've certainly got an SME's interest at the heart of what we do. We're using technology to deliver the service to various partners, and we've got a panel of 130 lenders that use us at the moment, and that's growing all the time. But essentially, it can be an end-to-end approval using technology and very little touching the sides. But ultimately, we're there to help the businesses, and that's why we're very pleased that we partnered with the Birmingham Chamber, and to provide that broad access to finance service for members. And we've created the Business Finance Hub, as you referred to earlier. And I'll just quickly share my screen if I can. And I hope everybody can see that.
Working, yep.
Yeah, excellent. That's always good. So yeah, to answer your question in a little bit more detail, I mean, we've had a fourfold increase in terms of business this year. There's been a lot of activity, and a lot of businesses have needed support, and particularly in March and April, when really there was a lot of panic in many businesses' minds as to how they approach things, where to go, what to do. And really, what this slide is saying is, and Diana's touched on a number of the points really. That it's important to have communication to actually achieve the desired result for the business and to take it forward, but also to plan. And I think one of the important things that we're providing is that impartial advice, and our solution is used by leading industry bodies, partly because of that. One of them is the UK Finance, which is the industry body for financial institutions in the UK, who recognise that we've got the interests of SMEs at heart, and so the key thing for us is to actually provide that guidance. So a lot of people are coming to us, not necessarily going through the full process in the platform, which is basically capturing a bit of data and making it as user-friendly as possible for a business. Because too often businesses have relied on their existing bank, and then when they come to actually their bank says no, where do they go to? And I think that's the critical thing, and where we can step in, and we'll certainly give them a view as to what they can do and where to go. And if I just touch on a little bit more as to what has been happening, I mean, to your question, Paul, there as to what is in the market. Well, there's a lot of people out there that have benefited from the government support schemes that have been introduced in COVID, and they have been very successful. There's no denying that. I mean, just to put it, give a little bit of context if people aren't aware. I mean, we've had 1.3 million or over 1.3 million businesses access bounce back loans in the UK. And on the Corona or the Sybil's scheme, which was introduced first, there's been just over 70,000. And in terms of the amount of funding that's been made available, those two together, it's a total of 57 billion to SMEs in the UK. So they're very extensive. And there's also been another one for larger businesses can access, and also the Future Fund, which was enabled equity to provide to SMEs. So effectively, this year has really been about working capital and cash flow solutions, which, as Diana's touched on, cash is king. They've needed to be able to because of uncertainty, access or know that they've got some cash in reserve so that they can come out the other end. And I think that will be the feature going forward for the next 6 to 9 months, very much so. So the types of funding, yeah, we can help through the Business Finance Hub in all products that are noted there. And I think it's worth mentioning, we have been trying to be a little bit more creative with certain SMEs where they wouldn't necessarily have thought that there are options, because as I alluded to, traditionally businesses have relied on their bank, but when the bank can't help, where do they go to? And there's a lot more options out there in terms of product from alternative finance providers, niche players. There's one there that says pension finance. Well, a lot of business owners might have a pension pot, and they can use that to actually facilitate funding of their business and ultimately get some revenue into their pension pot. And we also, the final one there, we do try and help indicate when we're looking at a business and talking about their problems and what they're looking for, that they might be eligible for R&D tax credits. And HMRC has been very good at looking at those this year and quite efficient in processing them. So the options at the market have very much been about government support schemes this year and very little else, but ultimately it's about working capital and supporting cash flow for businesses. So just moving on, a little bit more detail about the coronavirus business loan. We can't help so much with the bounce back loan because that's provided by 28 lenders that offer bank business current accounts, and they have to go to those particular providers. And I think the policymakers would like to think that there's a choice, but I think a lot of businesses will have found out that if you're not banking with a bounce back loan provider, it's very difficult to get a bounce back loan through a new provider. Now that's not the case with the CBILS or the loans for in excess of £50,000. And really, to access these, all you need is really to be a UK-based company, have a turnover under 45 million, and 50% of that is in trading activity. And so long as it's for a business purpose, then you've got a good chance of success. Now, there are 111 lenders that are accredited by British Business Bank to provide CBILS. And of those, as I say, there's a number that will look at new clients, and that's important to bear in mind. But I think, again, as Diana alluded to earlier, there's got to be forecasting and planning done, and it's important that businesses do that because the chance of success in this current climate where lenders are very risk averse, but they do want to help you, but you've got to help yourself at the same time, and I think businesses are conscious of that. And finally, I just really wanted to, because there's plenty that we could talk about, and I could probably cover many hours on this subject, but the Finance Hub is really all about trying to make it easy for chamber members to get advice and guidance. There's no hidden charges. It's free for access. You get the opportunity to get in front of a large number of lenders very quickly. But what you're not doing is sharing your data until you choose to share it with a particular lender, and that is very evident when you go through the process in the platform, which only takes 5 or 6 minutes to actually make an application. But if you did want help beforehand, then we're open 24/7. We'll come back to you in business hours for a more detailed conversation, but you can certainly get initial feedback from us, and if it's not right for you, we're going to tell you it's not right for you. We're not here to sell credit. We're here to help the business actually go through and find a solution to their funding needs. We'll share these slides with you afterwards. I did have a video, but I've skipped over it because playing a video on a presentation is always asking for trouble. But we've got another upcoming webinar tomorrow morning, in fact, with one of our lenders. And if anybody's interested to know about trade finance and detailed view of trade finance, Bibi on this occasion working with us to do it. So feel free to join that. But the key is as Diana was saying, it's about planning and communication. And there's a lot more that we can actually do to help facilitate if businesses want just to ask us questions. So Paul, that's where I'll sort of really leave it. It gives people a bit of a flavour, hopefully, as to what we do and what the Business Finance Hub can do. But I'm sure there's probably quite a lot of questions that people might have.
Well, thanks, Guy. And I mean, and definitely, if there are questions out there, please let's get them into the chat, and I'll put them to Guy and to Diana. I just wanted, I mean, firstly, just to say, and obviously, you said there with the hub, less hassle. And I think that's one of the key reasons why it works so well from the chamber point of view. You know, we spend a lot of our time translating messaging from government and other stakeholders into sort of everyday language that the business owners who, you know, or leaders, you know, who are very, very busy and are trying to navigate through can understand. And I think it's one of the great things about the tool is it's very intuitive, very simple. And as you say, it's there as a way to really help people get on that journey and to understand in a easy to access way. I was going to ask Guy, just what's the sort of success percentage of applications on civils at the moment then? You know, when businesses are applying, and you know, I guess that goes to the point about being prepared, doesn't it? And the more that you're able to plan, you're going to increase the success rate. But do we know what the general sort of numbers are at the moment?
I'll give you an indication from the statistics that the government published, because it's a very difficult one. But essentially, you've got 73,000 loans that have been approved for civils. But there would be, or they indicate that there were something like 160,000 applications made. So you're talking roughly, 50% or thereabouts. And I think it's partly because it's quite an involved process. So the benefit of Bibbles, which is why it was so successful, was it was self-certification, 2 or 3 pieces of paper, and basically, so long as you could evidence your turnover, then your bank current account provider couldn't object to actually approving the loan for up to £50,000. And that's why it has been successful, because a lot of businesses that we've seen have taken that, because it's a credit facility, 2.5% over up to 6 years, extended now to 10, which if I was I am a business owner, but in terms of if I was a small business, it's very cheap lending, and why wouldn't you take it? So there's a lot of businesses out of the nearly 1.4 million that have taken it, that have taken it for in case of need. Now, I think increasingly they will need it. And then there are those that did need it, but they probably need more. So what the government's done with the extension is allowed top-ups. So if you've got a bounce-back loan, you might now be able to convert that into a larger loan through the civils, and lenders will look at that. But clearly, you've got to provide a lot more information for a civils application.
So as you say, a lot of businesses are doing exactly what Diana said, really, and building in the extra scope, you know, before they need it. Sorry,
Yeah.
Diana.
Guy, and I think it's fair to say, when you look at the statistics and how they've kind of increased over time, so there's been a lot of accredited lenders come into the business bank process in terms of being available then to provide those CBILS, and that has increased the number of applications and indeed the success rate in terms of it being used. And it comes back to Guy's point about it's not just about kind of the existing lender. It's actually businesses now having the confidence in this part of the cycle to go to another lender as well, and look at making an application with another lender, not just their existing.
It's an important message, isn't it? Because, you know, if you just go to your bank, you get turned down. If you, you know,
don't stop there.
We're living in the world, so we're used to the fact that there's a whole host of different options, but it can be crushing, can't it? And people are under so much pressure, and it is trying to stress the point that there are more options out there now. And another thing I just wanted to ask really was around the question of timing, because, you know, obviously the CBILS has been extended, and is there a risk that it's a bit like, you know, handing in the essay, you kind of leave it until the last minute, and we sort of mentioned the furlough bonus scheme, which, you know, things can change, can't they? Even furlough into the new year, it's been caveated. Now, will it go to March? It could do, but maybe review beforehand. So there's sort of, it strikes me a bit of an onus, you know, if you're looking at this, and obviously those, you know, who are watching now are on the recording, you know, the time is now, isn't it? We're sort of, you know, already through the middle of
and it's a countdown. It's saying, right, okay, this is when the application ends, and this is what we did last time before we knew it was going to be extended. This is how many weeks you've got now to go through a process, and within that process, you've got to expect to be kicked around a bit, and it not to go just through a straightforward application. You may have to look at, you know, different scenarios. You may even have to look at an alternative lender as well. But it absolutely, Paul, it's got to be think now, you know, do not wait.
Yeah, I mean, the next few months until the end of January, to which the schemes have been extended to, that's going to be the order of the day in terms of, you know, what's out there and what lenders are focused in on. I should just clarify one point, I think it's in the chat there. If you are going to sort of increase and top up a bounce back or convert it to a Sybil's does have to repay the bounce back that's already been made available. And yeah, back to your point though, Paul, it is something that does require a lot of more information. You have to be prepared to share information. And I think one of the things that businesses are going to have to work with in the future much more is to have up-to-date financials to hand and to forecast more. And thankfully, you know, there are cloud accounting tools now that make that a lot easier. And I think there's certainly been a tipping point during the course of the year where a lot of businesses have become more digital orientated, where there was an inherent reluctance or fear or lack of trust in certain facilities and services that were offered digitally, but now there's a greater confidence, and if you choose the right sort of service, you can get a lot of benefit from it. I think one of the things I would highlight there is you know, cloud accounting. It's not to diminish what firms like Diana does, because actually it helps them. You know, ultimately they can focus in on doing more of that advice and guidance, and they're just, you know, receiving the information in from a cloud accounting platform to do standard audits and everything else. So I think information and how you prepare it and present it, and particularly for the Sybil's process, it is quite onerous. And I don't mean that in a negative way. You've got to be prepared. And to Diana's point, talk about various options with the lender that is considering you.
That's why it's important to use the support that's available, isn't it?
Yeah.
And there is, you know, again, an awful lot out there, but it's not a time to try to sort of struggle through on your own. If you're not sure, then ask the questions and find out and see balls. You know, I mean, you know, these are large sums of money, and so it's right and proper, isn't it, that the process, you know, is going to have its requirements. And I think that's, we see that a lot. You know, businesses have to be ready. You know, it's not going to be, you know, again, good businesses will be, isn't it? And if you haven't done the work, if you don't know all of the detail, then, you know, you're going to sort of compound issues already. So you've got to get out of that and get into the green and away from the red. I was going to say as well, Guy, just one point that you'd flagged in your presentation on R&D tax credits. I actually did a Q&A yesterday with one of Diana's colleagues at RSM, just talking about R&D tax credits. And it's a phenomenal opportunity. I mean, the Chamber, we have actually benefited through to some investment we've done in our CMs. I'm probably one of those classic chief execs who thought that surely we wouldn't qualify. Someone looked into it and we did, and you go, wow, that's almost a nice sort of bonus, but it encourages them to look at more. It's something just to sort of draw out for the audience that
yeah, I mean, I could add a little bit more on that, and maybe Diana can expand on it. I mean, it's not just for, you know, one immediately thinks for research and development tax credit. It's got to be something that's very, very sort of deep tech, if you like. It's got to be so complicated that none of us understand, or is AI and what have you. It's not. It's about improving processes. We helped a business down on the it was somewhere in the Midlands actually, whereby they were producing some form of natural yogurt, but they just produced and worked out that they were going to, if they improved their process slightly, it would actually make things more efficient. So it was all about the process in which they, you know, ended up making their product, and they were eligible for an R&D grant. And, you know, so it's worth trying. And there are a number of players, and RSM, I'm sure, is very good at this, at providing you know, at least a make sense test as to whether a company is eligible. But if you can get up to 33% back of the cost spent, then it's worth considering.
It's a huge opportunity in terms of generating cash into a business. And as Guy says, you know, it's not just tech. You know, it's a sofa manufacturer that changes the way in which the sofa goes through the production line. It can be as simple as that.
Yeah. Chamber of Commerce. There you go. You know, it's kind of
absolutely. We won't ask what you did.
I was going to just a couple of questions that have come in, and one here from Steve Walker, who's posed it to you, Guy, but Diana, feel free to wade in. Just how have you seen sort of demand for, I guess, CBILS or other products compare in the West Midlands to other parts of the country? Have you seen differences, or are we sort of, all much of a muchness? And likewise, Diana, just sort of from an RSM perspective, both in the UK, and I know it wouldn't be a direct comparison, but some of the operations that you've got in the States and different sort of business conditions elsewhere as well. How are we stacking up here?
I mean, certainly from our perspective, it's more the sectors within the locations rather than just simply looking at it at a location basis. So clearly, the Midlands is very heavy in the manufacturing, in the automotive. So you can see there would be that demand equally within some of the northern regions as well. If you look at then some of the larger CBILS, that's where you've seen maybe the kind of the London, the centric, the kind of the larger retail and hospitality businesses that have gone through those larger applications. So I think the sectors within each location has really kind of dictated the demand. Guy, feel free to contradict otherwise.
I actually would agree with you. It is sectoral. So to the question about regional variation, we've seen businesses from all parts of the UK and obviously being a national platform. But in terms of the West Midlands, probably not as much, or Midlands in general, because it is more producing. So a lot of the businesses, whilst there's been a number that have been challenged, they are still producing and manufacturing, so they're less affected in some ways. I think that the arts and entertainment, food and accommodation and hospitality, those areas or sectors whereby there had been more applications for CBILS, and probably haven't actually been supported, certainly from the experience that we've had, because it's difficult to be able to predict, what's going to happen for the next 6 to 9 months. So those that are in a stronger position in terms of balance sheets and financials will have been supported. But to answer the question, I think it has been, regionally, there's plenty of applications around the country, but it does depend on in terms of the sectors that you're operating in. I mean, certainly we've seen a disproportionate amount in probably North East and Scotland, in fact, through the platform. That doesn't mean to say that they're particularly adversely affected, but it might follow the trends.
Yeah. Andrew's sort of more of a comment, really, just around financial planning and sort of highlighting that it's a large educational piece needed for company directors around, I guess, core financial planning, and maybe a lack of support from the likes of banks. I mean, what's your view on that? I mean, I guess you're dealing with a whole host of businesses and seeing how much support they do need, and would you agree with that?
That's right. I think it's a really, really fair comment from Andrew, because it's not just the businesses that aren't as prepared for the financial forecasting and the planning, but it's also the lenders as well. We've seen, certainly from a restructuring perspective, we've seen a lot of lenders need to kind of gear up their teams to cope with the applications, to cope with monitoring of their customers. And there is a huge education piece. Certainly myself at RSM has spent a lot of time on that education, more so with the lenders and teams than directly with the businesses. But trying to just increase that education, and what might seem as a very common sense approach when you look at the 2 or 3 slides that I put up in terms of short-term and long-term forecasting. There's a lot behind that. There's a lot of thought that needs to go into it, and there's a lot of time that needs to be taken out of the business to do that stand back and to do that thinking. And I agree, they do need more support.
Yeah, I'd probably concur with that. 5% of UK companies have a finance director or someone that's got financial experience, and most businesses just want to run their business and don't want to have to worry about finance too much until it's too late, which was the point that was made earlier. And I think that is a challenge, and Andrew's right to highlight it. We can do our bit through the hub. We'll certainly talk to people, but an accounting firm is going to be probably better, and your local accountant or whoever you might use. That said, to his point, you don't necessarily, as a small business, have the time or get the attention of your accountant. But having a good accountant at whatever level will certainly pay dividends. I think from the forecasting perspective, what I would say is that a lot of people get a little bit worried about it, when actually, so long as you can manage a spreadsheet, put something down and have something in draft that you can talk to someone about, because I think most people can do that. And I think that's always a good starting point, because it helps you actually think, well, what do I think the position is going to be in 6 months, 9 months? But yeah, I would agree with him. It's a difficult challenge, but we'll do our bit through the hub.
Yeah, we've got Hub as well, so we've got the same tools available, and just our coronavirus hub starts getting businesses to think about different parts of the workforce, operations, cash, funding, so that at least get a steer as to what they should be thinking about and what they should be talking with to their advisors.
It's a really good point, isn't it? And I mean, I think you've both articulated some of the support in your own sort of ways that your organizations can offer, and with the same, and you always encourage businesses, you can't be an ostrich at this time. You've got to lift your head up, you've got to be out there, and if you're not getting the support in one area, you've got to look for where it is. And again, the Chamber have got a whole team of advisors here who can help to signpost to partners such as yourselves who can go that extra mile. And inevitably that's where partnerships come, because if you've got that sort of, you're linked to a chamber, you're going to have both a sort of a civic interest to a degree and an interest in really helping and supporting others. It's a sort of a very symbiotic relationship.
It's treating it like an exam paper. It feels really daunting when you start, but okay, just answer the question, what do I think the business is going to look like over a certain period of time, and here's my assumptions, so that then I can then go back on the assumptions, and if they need to change, then that's the assumptions I work through in the
and there's a wider point there, isn't there, about sort of business or financial education in schools, which again, you could talk about sort of to the cows come home, but it's an awful lot that we could look at there. And I was amazed at that stat, guy, as well, that only 5% of businesses have an FD. I kind of hadn't come across that.
It's very, very small, and I think, but and that's understandably so, because most people, if they're a small manufacturer or a corner shop, why would they need to have a finance director? So there is a need there, absolutely.
And Steve's put a question here, which, well, we sort of touched on. What do we think, or any sort of sense, I guess, around what may come next from Treasury in terms of deals, and do we think that they're not going to be as generous as the current schemes, therefore move quickly? And I mean, I suppose we've sort of touched on that really, but do you have any crystal balls as to what the Chancellor may have lined up? Or
no crystal ball. I wish I did, but I mean, having close ties with UK Finance, you're involved with HMT, and we also do various things for Startup Loans Company, which British Business Bank manage. The short answer is I doubt there will be something as generous, because bounce back loans, as I alluded to earlier, is a very good deal for a business. If you do need to have some capacity, I would certainly apply before the deadline at the end of January. The CBILS, again, is even if it's provided by an alternative lender, there are it's covering term loans, it's covering asset finance, invoice finance, and revolving credit facilities. Now, of the lenders that are there, not all of them do all the products. But there is a good choice, and they're limited by how much they can charge in terms of being accredited by British Business Bank. So there's a cap on interest rates, and so you might get something that's better under a CBILS, and clearly it's for a longer term and up to 5 million. So there's capacity there, but it will require a lot of effort on your side to present, and clearly business owners, to present the facts and present the case as to why you should get a loan. But the other thing to bear in mind that there will be a requirement probably for you to provide some form of guarantee over and above 250,000 if that's what you're seeking. But as to the specific question of Steve, I don't know his answer. I doubt it very much that these will be continued further from January.
And I think
in some ways, let's hope not. Yeah,
let's hope not. Absolutely.
Yeah, I mean, from a restructuring perspective, it's really important that when a business is considering the loans that are available, it still must consider its ability to repay it.
Yeah.
So there's no point going into this and thinking, well, that looks a good product, that will be good from a business, but it's still going to have to repay it further down the line, and being able to be confident to have the assurance within its plan to do that.
And Diana, both of you, I was going to ask about that, sort of the concerns around the debt mounting, as it were.
Yes, absolutely. That's a huge, certainly a huge, huge warning sign for us in terms of how the strain on the balance sheets, in terms of how the debt has grown within every business as they take on the loans. They've got a deferment in terms of liabilities, both for HMRC, possibly for landlords as well. It's still there. It still needs to be addressed. It's just not having to be addressed right now. It doesn't change the fundamental, impact of that business needing to operate and trade to be in a position to repay that back at a later date. And there is a real concern that as the timescales run out, in terms of that hiatus period for businesses and that stay, how they can cope with that burden of repayment.
What's your take on that, Guy, and just sort of it's a balancing act, isn't it? Because, and that's where I suppose it's everything we've said before, and understanding your business and what therefore is appropriate, and moving early enough to support yourself through this, and in some ways then gear up for grabbing those opportunities that will be there, and making sure that you're ahead of the curve when things start to recover. But it's also it's tough, isn't it, to get the balance right?
It is. I mean, to Diana's point earlier, there are winners at the moment, and they're looking at opportunities to actually merge and acquire, and even sort of the management buy-ins or outs, because there might be fortuitous circumstances for some that are doing well. For those that it's more of a challenge. There's a lot of discussion at government level about when bounce back loans become repayable and interest starts in March next year. And so there's a working group underway at the moment looking at how certain flexibility can be given, because we want to avoid the authorities would wish to avoid a big sort of number of companies going into receivership or having financial difficulties. And I think that there's likely to be flexibility. And I think one thing that probably Diana's probably better qualified to talk on than me is that HMRC was supposed to, for example, to introduce new rules on preferential creditor status in December. I think those will be put back. I think bounce back loans, whilst businesses can now extend, they can now extend them. So if they've taken out 6 years, they can defer payments for a period. So there will be a degree of flexibility, but it doesn't take away from the fact that ultimately the businesses are responsible for the debt. It's not like the PPP in the States whereby there's forgiveness. And that is the fundamental difference. So I think it's going to be a struggle and a challenge. But to your comment a short while ago, Paul, let's hope that these schemes end, because then things are getting better. And then, people or businesses are going to be in a stronger position to actually manage the debt that they've got. I mean, one can't forget, having debt in a business is a positive thing. And it helps a lot of people, a lot of businesses grow. But it's got to be managed.
And I think the fact that they've, in terms of, you look at the easement of the insolvency provisions, what they have stopped that stay on is wrongful trading, because it's really important that businesses right now consider, their duties, the directors that themselves think about their duties as officers of the company, and the way in which they are managing their business and their debt and their liabilities, and to make sure that that's not just thrown over the shoulder with the rest of the stay provisions.
No, exactly. It's fundamentally about knowing your business, isn't it? Really understanding it, understanding what options are available, what you need, what you can manage, doing it in the, you know,
risks.
Yeah, the risks, and doing it in the right and appropriate way. And, you know, this is one, and as we say, that there are so many options there, you'd be remiss not to explore and make sure that you're putting the different scenarios or the extra sort of capacity in place to manage through what is an unprecedented sort of time to try to do business in, certainly for a majority of organisations.
And use the people that are around that are seeing it in the market all the time. You know, we're all seeing these scenarios in lots of different sectors. We're seeing the applications as well. So there's, you know, you've got other parties that can say, well, that does work, that doesn't work. Have you thought about this? And just having that, you know, that second mind.
It's equally, isn't it, being aware of the other sort of schemes. Obviously, the furlough scheme, I think people are pretty familiar with. There's another round of business grants now, so grant rather than debt, which is coming out. It's not huge sums of money. I know these are sort of been done on local authority areas. Solihull have just launched theirs. Birmingham's will go live on Monday. So this is relating to, you know, businesses have had to close, for example, during tier 2, those sort of few weeks in October, and certainly through these months. And, you know, again, not massive sums, certainly nothing compared to Siebel's, but again, it's on businesses to try to be aware and get what you can when you need it. And a bit like we were saying about the Finance Hub guy, you know, I know the Chamber, we've done a lot of work trying to translate a complex environment. We've got our support grid, which is on the top of our website. And again, if people haven't seen it yet, then take a look, because, you know, we're trying to all collectively help each other to navigate through and, you know, get what is available and then explore other potential options such as finance, as we've been discussing today.
And I think that's a good point, Paul, in terms of the other areas of support that can available. It's difficult for the Finance Hub to help directly. Often the growth hubs and the LEPs are better at this in terms of the access to that local grant or local support in region. And the next round of discretionary grants, okay, as you say, they are small amounts, but it's worth looking at. And, you know, some of them are relatively straightforward to apply for. But no, in terms of the broader finance situation, going back to my point earlier, you know, bounce back loans and Siebel's will be the order of the day until the end of January. And I think most lenders are really that they're not doing any other lending except that. But they aren't looking at as many new customers as we would certainly like. And that's a challenge, which I think will feed through into mid next year. And I think you know, the forecasters are saying that from the point of view of the UK economy, we're not likely to get back to pre-COVID levels until mid to third quarter of next year anyway. So you know, we all know there's a problem and it will just take time to get out of it. But I think one thing I was conscious of time, one thing I would highlight is that I think lenders, particularly the clearing banks who traditionally come in for a lot of criticism, I think they've actually coped quite well, or very well in fact, with the government support schemes, because they had to furlough staff, they had to manage situations, and they've actually provided a lot of support. Going forward, you know, will that continue? I think it probably will. So they've had a bit of an energy boost from lots of negative press to now actually being, you know, a little bit more a stalwart for the businesses, which I think is only a good thing. I mean, ultimately, the finance market is the alternative that can be specialist and more nimble, but the clearers can't be forgotten. I think they have been supportive.
I think one standout comment that I heard on a forum yesterday was a lender saying that this has been a unique opportunity to get to know their customers a lot better and a lot more, you know, having that understanding of the business and its strains, its pressures, and being able to kind of go through this journey together with them.
Yeah, no, great. And I know you touched on growth hubs as well there, Guy, and certainly I know the GBS Growth Hub Vernon's with us today, and another good resource for businesses looking for signposting or support. They're based here at Chamber House as well, so we always work very sort of hand in glove with the Growth Hub. So yeah, as we say, I'm going to sort of wrap up now, so everyone can zoom off and grab a quick sandwich before the next session. I mean, Guy, Diana, any closing thoughts from either of you, or sort of calls to action around what Finpoint RSM can offer to businesses?
I think certainly from our perspective, it's just, you know, every business, you know, particularly within the chamber, has got, you know, a unique opportunity really to have access to advice, and it's being able to take that advice and not be wary of it. It harms nothing, does it, to have a 20-minute, 30-minute conversation to get a view, someone else's opinion, a perception of what's seen in the market, and to utilise that as best they can, and as you say, not have that ostrich approach and try and deal with matters head on now rather than leave them later on down the line.
What I would say is that I think we've all got to stay or be positive, because I mean there's lots of negative things that one can talk about, and who knows what's going to happen with Brexit around the corner or not. So I think it's going to be a difficult 6 to 9, 12 months. There's no question about it, and I think everybody recognises that. I think to one of my comments earlier, the digital future is now upon us in a way that perhaps we hadn't envisaged before, and that's you know, you've got to embrace that. I think you can't fight it anymore, and I think a lot of businesses have recognised that, and they can get a lot out of a whole range of services and not just in finance. So I think that's a positive. I think the government will continue to support as far as possible, but the likes of the chamber and partners, that collaborative approach. You know, I would agree with you, Paul. That's how, you know, businesses succeed. Actually, the networking, but also then utilising the partners that you know, chambers such as yourselves engage with.
Yeah, keep connected.
Yeah, exactly. You know, we're not, you know, in this on our own, and it is that pulling together support is how you know, people will collectively come through this, and it's always good to finish on a optimistic note. So yeah, Diana and RSM, Guy and Finpoint, thank you so much for joining us. I hope people have found that useful. Some nice comments in the chat. Steve, enjoy your sandwiches as well. And so that we have recorded it, so we will be able to, if you want to sort of share it later, we'll pop this up on social media and on our website.
And we'll share the slides as well.
Yeah, the slides will be circulated. So thank you very much, everybody, and have a good rest of the day.
Thanks, everyone. Thanks, Paul. Thanks, Guy.
Thanks.
Bye.